I'd like to welcome you back to the channel. So we have with us today a good friend of mine, Jason Lieber. I know him as Menachem Lieber, but we'll go with Jason for the more professional version. How are you, Jason?
I'm doing great. How are you?
Good. Thanks for coming on. I know Jason a very, very long time. And in fact, I had a career as a day trader, and he was one of the people that was like the pioneer of my generation, that the guys who wanted to get into trading, he was already trading before them. But at this point, he is not a personal day trader anymore. Thankfully, he was very successful in that arena. And now he runs his own fund. And so he's going to give us some advice as well as some life experience. And I think it'll be fun to kick it around.
Sure. So let me just say first of all, that my original intention was to try to get a job in would have loved to work at Goldman Sachs or even a smaller type of firm, or get a job at a hedge fund. But, coming out of Toro College and not having a lot of connections on Wall Street, it was really the easier way to go was to slip in. And if I wanted to trade the market, was to become a day trader. So around 1998, they started opening up a lot of day trading firms in Manhattan, and really across the country. And I had the ability to take a few $1,000s at that time, or borrow a little money and start trading, trying to make a few dollars a day. So I actually got into the hedge fund, which was my original intention. But I got in by being a day trader first, because that was really the only avenue open to me at that time.
Interesting, because I was going to ask if you were interested in trading for the big boys. After you left day trading, you could have become a market maker.
Yeah, there were a lot of ways to do it. So what happened really is there were kind of a couple of steps. After working at day trading firms, there are a bunch of what they call proprietary trading firms. You have firms that will give you capital. So if you have a track record and you go to them, they'll actually put up the money for you and split the profits with you, and they actually take the losses. So I was able to move my way up into one of those firms, and from there I was able to start my own hedge fund in 2010.
Right, and to clarify, you're not losing anything, because when you work for one of these guys, they're giving you more capital, so you can make more profit. And then if you're only getting 50% or so, you're still making as much as you were with no risk.
Yeah. I mean, they were giving me the amount of capital that I could not personally come up with. I could only come up with a fraction of that. And also, it's an advantage that you could take your money out of the market. You could invest it separately, and you don't have to worry about anything happening where you lose it. And I just wanted to add that I did realize early on that even though I started as a day trader, and I owe a lot of my what I've learned from that experience, it's very difficult to make money day trading. You end up making money 2-3 days in a row, and then you lose it all the fourth day. So part of where I advanced was learning what works and what doesn't work. And if any of the strategies did not work, I moved away from it. So I ended up trading, what we call swing trading, which was for 3-4 days. And right now, my fund is a combination of that short-term trading of a few days with long-term investing of a few months. So I kind of adjusted what I did over time.
Right. As opposed to, like, for example, I traded momentum trading. We'd be in and out of trades within moments. We'd be trying to get every zig and zag. And I think that was something that was important to you when we spoke about you coming on the show, is you wanted to clarify how dangerous and risky it is. Albeit you were able to be successful, but it is a danger zone to be in the market.
Yes.
It's not a risk, not a get rich quick scheme.
Yeah, and look, there have been very few people, particularly in day trading, the failure rates are over 90%. And I've seen a lot of really smart people come by. And it's not a question of being smart. It's not just an IQ type. A lot of it has to do with willing to take risks at times, willing to take one of the biggest advantages that I have, and I'm always telling this to potential investors, is that when I'm wrong on something, I'm not going to wait for a stock to come back. Even if I think it's cheap, and even if I think, I didn't time it well, I'm going to take a loss in the stock. And my theory is I'll make it back on something else. But if I'm wrong on something, get out of it and move on. And some people don't have that ability. They just will never take a loss, and they end up really struggling for that reason.
Yeah, it's like opposite of human psychology. When a stock goes up, you want to grab your profit. When a stock goes down, you want to hope. And if you could turn that one little piece of human psychology around, it helps a lot, right?
Yeah, I mean, the game of trading is, I mean, I don't know what percentage, but a lot of it is psychology. And we always say it at times, like once people start calling me, I get nonstop calls. Should I buy Bitcoin? Should I buy Bitcoin? It's usually
Right.
at the end of the run. And when people are panicking out of things, it's usually at the people panic at the bottom and they get excited at the top of the market. So, it's very hard to judge what really where people are too excited. But if you really think about it, it happened in 2007, 2008, when everybody was buying houses and trying to flip them and getting into real estate, and it was getting too hyped up. And it happened at times in everything from crypto to all sorts of, and look, we follow that a lot, where we try to jump on early, whether it's artificial intelligence or, we definitely are theme investors, but we try to get in early. And when when everybody knows it and everybody, it thinks it's an easy trade at that point, that's when we start to get worried and we start to get out. So very often we're doing the opposite of what makes sense.
Absolutely. I totally hear you. If it's something that everybody's talking about, it's not the thing. Because the people that made fortunes on Bitcoin, they were in it way ahead of when everybody else was discussing, oh, is this the time? Should I get it now? This and that.
Yeah,
absolutely. Jumping into your hedge fund. So first of all, how many of you are there? How many employees do you have working this?
we have 8 employees. 3 of them are analysts, and one of the I would say this is advice to anybody in any business, is hire really smart people. So we hired really, really smart guys who have experience in the market, or have experience in went to good schools, but not necessarily. It didn't really matter which school you went to, but you had to have a career, and you had to know how to really analyze and know spreadsheets and model out companies' earnings. And we hired some really smart guys who come up with the ideas for investing. And we also have somebody who helps us on the IPOs and secondary transactions. We have somebody who helps us with marketing, and then we have operations. So we have it's a small team, but that's we need 8 people, and I don't think. I wish we could hire more people, because there's always a lot of people in this area who are looking for jobs, but we only need a certain amount of people, and I handle all the trading.
Right. Oh, okay. That was going to be one of my questions. So I think that people have to understand that, like in a trucking business, for example, one of my occupations, you need a lot of hands on deck sometimes for the smallest, of jobs. But in your business, you're dealing with a fortune of money. Doesn't necessarily mean you need that many employees, because you just need your bases covered. Now, when you you pull off a trade, are you trading just like the way I remember watching you trade as a day trader? I mean, does your computers, I mean, obviously there's more modern technology, but do the mechanisms look pretty much the same, like a guy who's just trading his own stuff? Or
Yeah, I would say that, and I'm not an example of what a typical hedge fund would do, because we're a lot more active. We have a lot of positions, and but I'm almost pressing buttons the entire day. We're not algorithmic. We don't have computers trading for us. We do it all manually. but it's electronic trading where I pretty much press a button and we buy a certain amount of shares right away. But I'm just, that's exactly what I'm doing. I'm pressing buttons all day, taking profits on some of our wins, looking for new positions. We trade around our positions a lot, and we're always very active. That's kind of what our strategy entails.
Interesting. Yeah, I think usually when a person invests in a mutual fund, the managers, they purchase something and then they take a look at the end of the year, see if something should be maneuvered around. If it's an aggressive fund, maybe they'll trade a couple of things in the year. But what you're describing sounds like something unique. It sounds like next level up. You were talking about trading, then you were talking about trading for one of these companies that backs you. And then this sounds like the next level up where you're trading on this massive level, albeit not as many trades as you used to pull off. But yeah, this sounds like a little bit more of trading than a long-term hedge fund investment.
Yeah, I mean, the typical hedge funds have a handful of positions, and they have all the analysis, and they say, we own it at this price, and we have a target price. We always feel we're not, we probably don't know more about Microsoft than other people. It's very hard on a very popular stock to really have incredible, specific. You can't have an edge on it. So, we don't just buy stocks and put them away. We watch them. We're on top of them, and that's how we market ourselves to investors. That we're hands-on managing and trading positions, and a lot of it has to do with my day trading background. That even though I'm not a day trader, I have some of those skills that I picked up as a day trader. So we have long and short positions. We're always somewhat hedged on the market, and we just try to be careful as well, managing our risk. And I think we've had the ability of not really getting caught in bad markets, because we're always worried about the market. We're never 100% sure we're right. We're never 100% long. We're always taking hedges and taking bets on the short side as well. And it's worked well for us.
Right. We spoke about this, that I told you my theory was that I used to think people who are in the market for a long time, they do well because they've seen all the markets. And then I've come to realize it's because they know there could always be a new type of market they've never seen. So you keep your eyes open for, the unpredictable.
Yeah. People say history doesn't repeat itself, but it rhymes. And I kind of feel that's correct, that there's a lot of similarities. You're not going to have, 2008 was not the same thing as 1929, but there were some similarities. And you could, by going through history, and I always tell people, there's a lot to read. There's a book about one of the top traders of all time named Jesse Livermore, and it's about about a stock operator. It's a great book, and you could see that this guy who was trading in the 1920s and 30s, a lot of trading had the same, it didn't change as much as you would think. A lot of it changed a lot, but a lot of it is the same. So you could really, by going back and reading history and reading books like Liar's Poker, there's a lot of lessons to learn from reading financial books and really having a passion for the industry, and that allows people to really succeed here.
Yeah, that's what I was going to say, was the one thing I see from all the people I interview, they have a passion for the thing they do, as is clear with you also. Just a little plug. What is the name of your fund? And also you said there's a cute reason for the name of your company name behind it.
Okay, well, like I said, we're not here into the marketing of our fund, but it's called MIDA Advisors, and our main fund is the MIDA Advantage Fund. MIDA is Mali, Yael, Dove, and Adam, or Ushi, which is my 4 kids' names, and that just worked out that way. We're not generally marketing to the public. You have to be a qualified investor. The hedge funds are not meant for the casual people. Maybe it should, maybe it shouldn't, but that's the way it is. So we're not looking to go. We get referrals and people inquire, and they could always ask about things, but we're not marketing in magazines. We don't advertise. We get a lot of word of mouth, and we're generally set up for institutional investors.
Got it. Okay, so then at least the rest of us know what we're missing out on.
Yeah.
Sorry.
And I would just say is, because there's been a lot of stuff in the news lately. You got to be very careful, where you invest in any market, but particularly in the hedge fund business. You want to make sure they have a good auditor, a good administrator, that they're run properly, and there's checks and balances on it. You can never be 100% sure, but there are ways to at least cut the risk of having problems. And I would also just tell people, talking about in terms of, if anybody wants to invest, I mean, people ask me all the time, and I tell them, particularly for, younger kids, who are just starting to work, take a certain amount you could put away every month and open up an account, buy the QQQ or the SPY, which is the S&P 5. It's either the NASDAQ 100 or the S&P 500. Buy it, pick a day every month, and whatever you could put in. Sometimes if you make some extra money, you put in a little extra. In 20, 30 years, you will guaranteed be in pretty good shape with that investment. It's always worked. So, everyone tries to get these get rich quick schemes, which might be crypto, it might be a real estate deal, it might be somebody starting a company, but the way that's guaranteed is to put it every month in a major market index, and you're in good, you're guaranteed to be in good shape.
Interesting. Okay, great tip. I just want to end off by saying that this is the reason I started this channel, is that, as I was telling you in our conversation, that people have a presumption of other people, and they don't really get to know who they are until they actually have a conversation about it. And I think that this, to me at least, is very enjoyable. And I think that the public will find it interesting that they're speaking to a hedge fund manager, and it's just, you break it down so simply. Obviously, it's comprehensive, and you need to have intelligence, and more than anything, a lot of experience. But I love this. I love that we're able to have a talk, and by the time we finish the conversation, people have more clarity on a topic that's hazy, feels like out of reach. Not that I'm saying everybody should run out and become a hedge fund manager, but I think that with your help, people have more of a clarity now of what it is, and I thank you for that.
Sure.
And thanks for coming on.
Very happy to be on. Thanks for having me.